Well, that's the interesting thing. I mean, we're increasingly moving to a world in China of winners and losers. You've got in the banking sector, the smaller banks are getting killed because of the Baoshang debacle. All of a sudden, they can't get any liquidity. But while the state-owned banks are considered safe havens, basically. In the private sector, you have a situation where, because of the crackdown on shadow banking, a lot of the private sector loans dried up. And meanwhile, 45% of exports are from the private sector and only 10% from the state firms. So they're getting hurt on the trade war front. So it's really becoming a much of a winners and losers situation with the state-owned sector and some of the bigger companies winning out.
You know, Andrew, I've just looked at some of your research, and one line particularly stood out to me here, and that is when you say the trade war, even after it's settled, will continue in the form of competition in technology, with the US continuing to ban high-tech products from China. This means that you really need to be very specific when you're looking at what tech companies you're actually investing in. If indeed you are right and that does continue, that will have a very long-term impact on some of these companies. I mean, Huawei is a perfect example.
Exactly. That's the point. I think this near-term issues of the trade war aren't going to go away, but the long-term competition in the tech sector is going to continue for many years to come. And that's a function of both the security aspect of tech, which the U.S. is heightening, and also the fact that it is a growing industry that a lot of countries want to be leaders in. 5G is a $200 billion market. It's a huge piece of pie. So I think that's going to be a problem for lots of countries, and China in particular, because they've got the added problem of security concerns, and the Europeans are starting to push back on that.
Okay, so what does this mean when you break it down a little bit and you look at the 5G related sector as a whole? As you said, it's going to have a huge amount of investment in it, and if you pick the right plays, you're likely to make a lot of money when it comes to 5G and the rollout on a global basis. Where is the safest place then to invest?
Well, you've got the services sector domestically in China that is obviously untouched by the trade war. Companies like Tencent and Alibaba with WePay and so forth are going to do very well in the future because they're taking market share from the banks. On the hardware side, it's an interesting question because if a lot of the stocks could get killed and then slowly wind their way back, like Huawei, not Huawei or some other traded companies, they could come back over time as the effects of the trade war start to wind down. But that's a very risky bet. The real question is looking at some of the other European and U.S. companies. I just got back from Stockholm, Sweden, a week ago and met with the Ministry of Trade, and they think there's a huge opportunity for some of the Swedish companies to take market share from Chinese firms. So there's an example of where you could do very well.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.